Today we are going to discuss 3 major pitfalls that all traders must avoid if they want to be successful in the markets. Pitfall number 1, impatience. In trading terms, impatience rears its head in major and minor ways, both of which are significant. On a major level, traders of all markets and experience levels tend to fall victim to impatience when it comes to expectations of returns. An attitude exists that success is a given and that it must appear quickly and without much effort. Nothing could be further from the truth. Because of this tendency to expect the unrealistic, traders tend to easily slide into pitfall 2, which is lack of a clear vision. The tendency of all traders to become impatient with their system or technique is simply greed. On a minor level, or more accurately, on a practical level, traders often fall victim to impatience whilst in an actual trade. How many can relate to the following scenario? You analyze a particular contract. The criteria you've established for entering a trade is finally met. You set your stop loss and your profit target and you enter. Suddenly, now that you're actually in the trade, things look a lot different. There's a level of resistance where there was none a moment before. The entire chart kind of looks like a booby trap to you now. The sweat starts beading on your forehead. You feel a bit queasy, but you're not sure if it's from excitement or anxiety. You clear the spread and you're actually showing a few pips of profit. You say to yourself and pat yourself on the back that you were right all along. You knew that this was going to be a profitable trade. Suddenly, the market reverses course. You're in the negative again. This continues for another few minutes or hours or days, depending on your time frame. And each time you feel a little worse about the trade. Finally, unable to take another moment of this excruciating torture, you see a few pips profit and take it, closing the trade. At that moment, or so it seems, the market explodes, running to your profit target and beyond. How many of us have actually experienced that exact scenario? This inability to see the trade to its conclusion is often caused by a lack of belief in the system, or belief in ourselves, or technique that is not being employed correctly. If you believed 100% in the reasons for being in the trade, you wouldn't be anxious to get out. So what is the solution? We've spoken about 2 different levels of impatience here. For the more major impatience relating to the overall returns being generated, it's important to take a step back and re-evaluate our expectations. Some questions that may help. Are my expectations realistic? What are my long-term trading goals? How do I gain confidence? Well, to gain confidence, our recommendation is to do evaluations with us at OneUp Trader because no demo account is going to give you the feel like an evaluation does. Because you know there is a funding account at the end of it. You know that you are trading for something unlike a standard demo account where you're just randomly placing trades and getting a feel for the market. Remember, the 150K account only costs $350 per month. And if you have what it takes as a trader, then that account will give you $5,000 drawdown and risk when funded. This way, instead of risking $5,000 of your own money in opening your own futures account, you can simply take the less financial risk alternative and sign up for an evaluation with us. Pitfall 2. Lack of clear vision or flip-flopping. Flip-flopping is closely related to the pitfall of impatience. Why? Because by nature, traders want more from their trades. If a particular strategy isn't yielding strong enough returns, or so the individual thinks, there must be something wrong with the strategy. And so it begins. This is one of the most common problems encountered by traders. We don't realize that the problem often lies not in the particular system, but within our own selves. So what is the solution? If you invest in a new system or technique, give it some time. Success is measured in hundreds or thousands of trades, not just a handful. No one can say with certainty after only a few trades whether something is a success or not. Budget your time, energy, and capital wisely. Lay out a schedule for testing. And this is why it is so beneficial to be a part of the OneUp Trader system, because you can test these systems in simulated environments that give you the same feel as a funded trading account. Pitfall number 3 is overtrading. Overtrading is one of the worst pitfalls any trader can fall into, and it's especially common amongst day traders. Whenever a trader begins to overtrade, they have simply forgotten their trading plan and are now just trading with the gambler's fallacy in mind. Remember as well that each trade you enter costs you commissions. and this is going to erode your net profit. Many traders convince themselves that the commission is an irrelevant cost of trading, but in fact it quickly becomes a significant part of your trading equation. If you take 100 trades on the funded trading account over a period of 1 month, that equates to about $450 in commissions per contract. If you're trading 3 or more contracts at a time, that is well over $1,000 in commission. This is why it is vital to realize you don't have to place hundreds of trades a week, but just a few high-quality trades will prove to be greatly superior. So what is our solution? Depending on your state of mind and how well you can stick to your trading plan, you should always be conscious of when you begin overtrading. It is any time you know that you are just taking arbitrary trades. Remember, a professional trader would never trade this way, because even if you get lucky and do well on that day that you do decide to overtrade, it is not a long-term solution and never will be.